News from Europe again dominated financial news overnight, with news that 25 of 27 European countries have signed up to a treaty designed to cap their spending. Effectively, they are required to meet a cap which balances their spending against their tax take. If they breach that cap, effectively they are open to sanctions from the other partners in the European Union, but also possibly open to sanctions from the European Court of Justice, which is able to impose fines. This was generally treated as good news by analysts. However, there was still some bad news out of Europe, and that involves the Greeks still battling to settle their debt crisis, and also in terms of Portuguese bonds where yields blew out overnight, although they did recover to come down to roughly 16%. So what impact did this have on markets? Looking at equity markets first, locally both the Kiwi market and the Aussie market were off slightly, down roughly 10 points each. The Dow was down roughly 50 points, but in Europe markets were actually modestly up. Looking at currency, the Kiwi initially traded very strongly against the US, breaking through the 83-cent US barrier before dropping back to around 82.5. The Kiwi was also up against most of its major trading partners. Last week, the US Department of Agriculture released its figures for total cows in US herds across the country, and it showed that the total number of cows was roughly 91 million, down 2.1% in the same time last year. This was driven predominantly by a fall of 3.1% in beef cattle. One of the contributing factors to that was the huge droughts that had been through Texas and Oklahoma, losing roughly 1 million head of cattle across those two states. This shortage of supply is reflected in US retail beef prices, which have increased markedly by roughly 13% over the year to roughly $5 a pound. Surely this must have some good news on New Zealand exports. Well, actually, that's true up to a point, but consider. With the high prices of beef, we're seeing substitution of chicken and pork in the US market, and that's also reflected in terms of beef consumption going down, falling roughly 4% over the last year to £57 per person. The currency continues to be an issue as well. Surprisingly, US exports of beef are up, and this is because of the US currency being relatively low compared to the Asian currencies. And this, of course, is completely the opposite to where the Kiwi sits, with the Kiwi strength making our exports relatively more expensive in those markets.